Jay Powell he was actually masterful also at not giving any answers about the guidance. What are they going to watch? What's going to trigger them to hike again or pause? Why did he work so hard? What is the Fed, how is this part of the Fed's strategy right now? What does it mean?
Well, first, to answer your first question, I think they're going to follow two things. One is the growth pattern in the economy, and the second quarter numbers will come out in a few weeks, and it looks like that it's going to be a pretty strong quarter, so growth continues to be relatively robust. Then, obviously, the inflation numbers, a wide variety of inflation numbers to try to form a synthesis of what the underlying inflation really is. Those are the two things I think he and the committee will be following very carefully, particularly over the next 8 weeks, in which they get quite a bit of data, actually. So that's what's on their mind, and I think the uncertainty around the actual path of inflation is informing their reserve about committing to any forward guidance.
In your opinion, what would, in terms of inflation in particular, what would incline them to say, oh, we can pause? Is it going to be the core CPI, core PCE coming down? What would incline them to hike? Is it going to be a labor market that's just so hot, wages continue to rise, et cetera, that they feel it's what they have to do?
Kathleen, I don't think it's any one thing, because they very much look at a dashboard and try to form a bigger picture about what's happening with inflation. But wage pressures would be one data point that I think would be very important to them. Core inflation measures and other measures that kind of cut out the outliers, whether it's food, energy, or other outliers. They're really trying to get an idea of the undersea currents, how those are really coursing. And that's how they'll come to a view of whether they have to act further or whether they can pause.
You know, Dennis, there's a lot of economists looking at the inflation numbers, looking at base effects and compare year over year. And we're going to be in a good few months of, oh, inflation looks like it's coming down. But then all of a sudden, depending on what the next series of numbers do, it could look like inflation is starting to rise again. If that happens, do you think the Fed's going to be put back in a position where it has to get a little more definite and even aggressive about more rate hikes?
Well, the base effects argument is that many months ago there were numbers that are in the full year, 12-month inflation numbers that are really history now, but nonetheless they inform the overall number. I think what they'll be doing is they'll be looking at shorter term measures of inflation, month over month, quarter over quarter, 6-month measures, taking all of this in to try to discern what is the current run rate, what's the current degree of inflationary pressure, and they can eliminate this concern over base effects by looking at shorter term measures.
So Dennis, when all is said and done, where do you think the funds rate is going to get to? Are you in the camp that says we may even have seen the last one, and if it's not the July hike that's last, it's going to be the September hike? Or do you see the possibility that inflation is going to settle down and stabilize at even if it's not still rising, even if it's not going up, et cetera, that they're going to be, that you would say they will be in position, or you would be if you were at the Fed now, to have to hike again, to keep the tightening going?
I think the assumption of one more increase, either at the September or the October-November meeting, is a reasonable and plausible way of looking at the future. Beyond that, it's just simply going to depend on how inflation evolves. And I have no better crystal ball than anybody else in that respect. So I would just say that I think as of now, you can see a scenario of at least one more hike.